Okay, so here we go. Good evening, guys. Ken at Tortoise Capital, Nightly Strategy Podcast, March 25th, 2020. I'm reminded of a saying from operations research community, the quantitative modelers, that the best model of a cat is another cat, preferably the same cat. So to me, the best simulator for the market is the market itself, traded forward. So we've got a bunch of things to cover. So just in the sequence that they're in the lineup here, this was UDOW today. There was a we actually got this trade and a cash, and then this was a re-entry when it crossed, and so we got 1, 2, 3 in the usual way, and then crossed at the RL, selling at the RLXD. That was about 15R on a tight stop because we're right at the PSAR on this one. This one added a couple, and we actually had this one short. I had so many charts on this one, they're not even all shown in the recent history. This was a, I'm in the Talent LMS system. I'm turning all of these daily strategy videos and the follow-through lessons into a standalone course so that we document now and forever all of those lessons so we can come back and study them. That's going to be part of the library card approach, that if you're in the coaching program or you buy the library card access for a year, you'll get unlimited access to all those courses. Here's just the first page of the ones we're building out. Eric Morrison's Forex 0.8 and 1.0. The first 50 nuggets, courtesy of Catherine, who's a black belt in tortoise techniques, and showed her first 50 aha moments in a beautiful narrative form. Flashcards 101, I probably got 100 flashcards where it's a single image that captures many things all in one grasping motion in a visual way. The 37 strategies, sort of the top-down approach to the market. The tortoise boot camp stuff from the last 4, the best of those put together. That one's already semi-built out. That's got about the first 40 lessons already built in. I'm going to do one on how to read the weekend report in thorough detail, and then the daily report in thorough detail, and then that daily strategy of how we adapted and thrived through the coronavirus. So that's all going into those courses. This is what the boot camp essential course is. Discussion of the tortoise ecosystem, basic training on psychological states, estimating gains, the internal pieces of psychology, then a bunch of standard practice boot camp lessons. Each one of those is like 20 minutes long, so that's like 400 minutes. That's about 8 hours of video already. Sometimes I wonder why everybody doesn't get through everything. But then core and turbo trade frames, how to set them up and how to follow through. Just some samples, visual box trading techniques. You'll see a lot of that's from today. And then the multi-time frame, multi-lens analysis from 4 times last year that just set us up for success. We're still living off the goodness of those analyses. This was the ending trade of the. Let me put that in yellow so you can see. This was the end of that series in UDOW. So that's that red dot here. This red dot here, it was the end of this really nice long train ride. That one is this one. And there's some other narratives I put on YouTube and in the Patreon that talks through it, but I just want to get it all at once. So that's the end point. So this one was, it failed to go all the way down to the VWAP, so bought the RLXD, 1 hump, 2 hump, and then an RLXD exit. Now, this is the one that was really crucial. I mean, I think this is really important lesson to learn. There was immense volume in that moment. So this is 1:30 Eastern, and there was so much in that buy that it moved the VWAP a great big chunk. Somebody dropped huge volume on that. And then I bought 4 positions where I usually am just entering with 1 and then building. This one I felt that one justified 4. That's the first time this year I've done that. So I put 4 into it. It rode the PSAR up, and now at this point I still got the PSAR exit in right here. That's already about 6R of execution, maybe even 8R in hand because of that decision. And that's based on that market's money that I earned on the way up here. The way that 4-banger thing worked, it ended up right after here. It held the PSAR, tested higher, but couldn't make a new high. And then I sold the RLXD here. That's 8R, 8 execution R. And now as it pulls down here to just north of the Z-2, and really this previous belly of the RL10. I am stalking this trade in the following way. I'm going to get long at the crossing of the green line with the target here, or I'm going to get short if that violates. What this also shows is the risk reward of the last trade. So all I'm doing on this one is getting ready to get long if it comes up through this. If it holds support at the previous PSAR and then crosses that line a second time, I'm long and going to go this way. But if it fails, the target is down to here. What had happened was that it failed, and get one scoop, and then the P1 wanted to get paid. That did not feel like it was going to go all the way back here, and you can hear me. You actually saw me trading that one live in the short video on that one. Got short, and as this was mucking around, I moved my stop down to here, targeted this, and then looked at, this was the place that if it violated this belly of the 10, I would get short, but then it got me out, and then I bought the RLXD long, and then basically recreating this trade, only this was on one scoop because we'd already have one significant short. So I didn't put 4 on this one. I put 4 on this one, but I just had 1 on this one. So it moved up in 2 legs. See, this was 1 leg up. This one went up, pause, and went up. So this is already making a lower high. So you can feel the energy coming out of this thing at 2:15 to 2:40 or to 2:30 in the afternoon. So I take this cash. Now I treat this as the yellow zone in here. It hasn't decided, but I will get short here if it breaks the Bollinger Band mean, and I'm looking to recreate this trade. But if it comes up, I will take this long and try to get up to the Z3 and the fair value. What had happened then was it came down and broke, but then immediately reversed. So I scratched and fractional loss inside that box, and I said, all right, now this whole business here is yellow zone. I will get long if it breaks out above the high of the 10, or it breaks this double bottom down in here. I'll get short in here. And now, so I just widened the that yellow zone of indecision. I'm ready to get long 1 or short 1 there. So what happened in this series then is it violated, came down, tested, held support, cash. Now this is the same trade. This is the same trade as this one. Just RLXD long. And now here it feels pretty good, so I've moved my stop up to a 2-bar low. So I've locked in that much. And what I've decided is if it comes up into this box, this is where I'm going to add the second position. And this thing ends up, I think, just rolling over in here pretty soon. Yeah. So, I remember now. Yeah, this actually came up in 2 levels. It got just into this new box. So I got the second position in. It mucked around, started peeking up. At this point, I had already started moving my stop up to be underneath that bar. Whoops. Where are we at here? Oh, let's see. And yeah, the exit, this turned into an exit shortly thereafter, and then I was done for the day on that one. I was just out of gas. Meanwhile, I just want to show you the other things we got going on here. The good old hybrid frog. So while we're horsing around in UDOW, what I got going in the morning is Brazil with a gap up. First run up, comes back and finds support, then crosses the VWAP again. So I put the hybrid frog box on at the belly of the dragon, and that is a 20-cent risk, calibrated to the circle, no doubt. And that's a Z3 breakout, or a minimum manageable risk box off of the low. So we're long at 23.45. I call it a 25-cent risk. When it takes out the hump of the 10, this congestion, and then breaks out on the next Z3, just add the next one at 24.10. Also same position size. This does nothing but go straight up, never looks back. Finally, I just have to put a third one in just because, and then play the RLXD. So this one captures from 23.45 to 25.65, so that's $2.20 on a 25-cent risk. That's 10R-ish on the first position, so that makes this one probably about 8, and this one probably 3, so that's about, I don't know, 15 or 20 R of execution risk on a hybrid frog, and then simple follow-through. Mexico, same thing, only better. Notice the same pair. Gap up, comes back, finds support, minimum manageable risk box after the Z3 pinch. Now we're about 30 to 40 minutes into the day, and everything is up in the world. Now this thing has a 20-cent, less than about a 20-cent risk, so we're long at 27.40, 27.95, call it 28, so that's 60 cents in a hand. So we're getting into the second position when it takes out this hump, and we're already 3R in hand of execution here. So that now we're 6R and 3R, so we're about 9R in hand when this one, that's 12R in hand, and cash in the usual spot. And then this one was better than EWZ. This one got a nice pinch, hardly sold off, and started to resume, so we get long and you put your stop in. So that's another 20R of execution, plus 20R in EWZ, plus 20R in UDOW. I mean, guys, you're looking at a 60R intraday move. For crying out loud. Oh, yeah, so this was the, this one was what happened in the rest of the day in the Dow. So the, that last set of 2 that I had talked about, come on, Kenneth. So this was that, sorry. Where did my screen go? Hit something on my screen. Stand by. Okay, so we're back. So this was the that last trade in UDOW where we had the fractional short, and then got the second scoop in when it took out this previous hump, and then just mucked around, failed, exited. At this time, it's like at 3:10 Eastern, so there's like 50 minutes left in the day, and it's the time of day where I'm out of time. I'm almost out of will, to be honest. Time, will, pattern, and money. I'm out of will as well. So on a better day, I would be short here. I almost wish that I had been, because that pays off in a big way. It's a big sell day in the afternoon. It goes from about 41 to about 38. Let me show you that one real quick. Where that shows up. So this was that 2 scoops up and then the short, and then I just said, hey, I was out of will and time. So now in that last 20 minutes, this thing goes from that Z3 pinch and then a breakdown from 41.50 to 37.50. So that's a 10% sell-off in UDOW right there. You know, the move on this one, if you were going to play it, that I find that hard to trade in that last 15 minutes. But if it does break down from the Z3, your target would be the VWAP. In this case, it sold off, came back, and then closed weekly. And then the futures were up in the evening. So I think there will be some rebound from this, and the world's going to take heart. But this blue opportunity space is space that I usually just give up. This is why I like to get flat and lock in the gains of the day. Because to me, where I can get paid is in this area in here, that, you know, the morning shenanigans, and then the nice leg 1, leg 2, leg 3, and then there was some tactical play in here as that wave crest. This looks like the Great Wave of Tanagawa, that beautiful woodcut from the 15th or 16th century of Japan, right? So that beautiful strong wave now gets into froth, and it kind of just mucks around. But to be honest, the reason to keep trying this, especially if they'd have passed that stupid stimulus bill, was that the range stat in UDOW is $11.50, and if you go from 35 and add 11.5, this thing can get to 47. So even while we're trying this down here, I'm mindful of the fact that there could be another $6 move to the upside on this, just to be a range stat. Just to be a range stat. Right? So that's why it's worth venturing. But just notice that's what happens in that last half hour, is all those leveraged players are getting flat and deleveraging in the last possible minute with algorithmic trading. So that's a young man's game right there. Okay. So now the daily thing. So here's the daily trade from high to low. Here's the 10-day high and low, the 30-day high and low. It closed right here at the black line, so we're right at about 32% off the top. So this is 10, 20, 30, about 32. Monday's open was way down here at 227, and now it's up to 246. So it's a 10% gain so far this week. Substantial. There was a nice big move up here, but you see it really closed poorly. But the futures look promising. So it got right to the PSAR, got through the dragon to the PSAR, and then rejected. So we'll see what that's going to do. So we're still deep in the winter, but I want you to notice that the winter has just almost become spring. One more good day, and this is going to become spring at a 47, score of 47 on MACD histogram. So that thing has run its course, unless something wicked this way comes. Shakespeare, Ray Bradbury. If you ever want to just scare the crap out of yourself, watch Something Wicked This Way Comes, the adaptation of Ray Bradbury's novel. It is terrifying in a quiet Disney kind of way. It is brilliant. Jason Robards, Pam Grier, Jonathan Franklin, Oh my God. Something wicked this way comes. Anyway, that's where we are right now. This was that, what I want to highlight on this one was the opportunities in this last hour, or last 30 minutes. That's the VWAP magnet down to here, and the follow through would be the breakdown from Z3 to the belly of the 10. And then you can't really get this and get that unless you're just amazing. But that's really the opportunity that was there, from yellow dot to yellow dot. So the VWAP magnet is an example of one of the lessons that's going to be in those day trading courses that are, it's just an extra thing that we talk about that I can't put into every course, but it's going to be part of that learning environment, so you can start picking up these techniques and strategies inside those fully documented courses, right? Today, so the big winners: Boeing up 24% on the bailout. Simon Property Group win. Mexico and Brazil. I'd love Mexico right now, man. They're not going to bail out their companies, and they're all aboard. And we're gonna recreate a North America trading zone, and we're gonna go Monroe Doctrine on people, and we're gonna trade with the partners north and south of us, and we're gonna sort out the border because it's stupid not to. And we're just going to take this amazing educated population in North America, and we are going to set the standard for world production in the next 20 years. We are so energy independent. We got a workforce that's off the chart with work ethic like you cannot believe, and we've just had the shit scared out of us. And we're going to establish a national health care service like the National Guard, but which doesn't deploy unless they volunteer. And those kids are going to get their tuitions paid for, and we're going to have a health care service that will be the envy of the world. That's what we're going to do. That's my bet. The things that got smashed was energy, and Alcoa gave up the ghost a little bit here. So Alcoa and Devon Energy and Virgin Galactic gave back some. I was disappointed in the give back in Home Depot and U.S. Steel, so we'll see what that looks like in the. Somebody had asked me for the parameters sets. That's fine. Early in the day, I did a speed run to show you what it's like doing turbo adjustments in the swing portfolios intraday. So this is what Boeing looked like. It was the dominant player this morning. It was up about 34%. So I took the second position here and then moved my stop up to the daily low. And so I did about a 15-minute speed run in the late morning that showed what it was like to adjust these things on the fly on a good day, and you want to lock in gains. So we'll see how that survived contact with the nation. So a shift to a speed run now, if I may. Yeah, let's get to the daily charts. And let's zoom this rascal in. So Alcoa, I had moved this up not far enough, so I'm still in this one. If I had been more alert, I should have taken this one. When it rejected the PSAR, I should have taken the Z-1, but I only moved it up into here to the low of the day. So that's where that's going to be. I'm a little disappointed in that one. Apple. So I had moved, I had gotten long here, and I've got my stop at the low, below the low of the day, so I'm getting ready to cut on that one. I think it'll be all right. Aussie dollar. Worst, yeah, that's not looking great. So we were long from here on yesterday at 59.36. My stop is still in place. That's just going to go or not go. I don't care. Boeing, this one, our second position got in, and I had moved my stop up as it was starting to fail, and it came back and hit me at the PSAR flip. So I didn't have enough time to edit all these before this was going on. I was working on some stuff. So the good trade on Boeing was 105 to 158. The second one got long at about 150 and then cashed 158. So I feel pretty good. I feel like I got a year's worth of recovery on Boeing in 2 days, and I'm ready to get back in that one. We'll see. Caterpillar, still okay. It closed here. Closed above our little diagonal line of value. So I'm going to move this one up to the PSAR. Cliff, I got long. Can we see where that rascal is? I can't see the... Yeah, it closed right at the where we got into it. So this thing is still in play. And my stop now at the daily low. Cisco, I got long. And I was going to add a second position up here. My stop is still here. It then sold off some more. So we're still in that one long term. Cut, I'm moving my stop up to here. That's still okay. Still in good shape. Chevron, got our third position in right here. My stop is at the 2-day low. Come on, oil. Devon Energy, we got the second position in here today. But my my stop is now at where my second entry is. Emerging markets, I got long one. I'm leaving my stop there. EFA, we are long one here. And stop is still here. Not trusting that, moving that up. Japan, still good. This was white knuckle time here. This thing came down, was close to the stop at the skin of the dragon, but it held. And so we're still 2 positions in. I want to try to move that to no lose plus dinner for 2. Come on, Japan. If that works, that'll be really good. Kept a piece in Mexico, and the stop is still here. Let's give it room to breathe. I think this thing's going to... Sorry. That thing should still go up to the Bollinger Band mean. That's my hope. Brazil, I'm only trading that intraday. I could have kept a piece, but I like Mexico better. First things first. Home Depot, 2 positions in. We were an inch away from hitting that stop at the skin of the dragon. I should have just taken that one off, but we'll see. I got a belief that tomorrow's going to go. We'll see how that works. I'm just stocking IWM. I got no positions in it. Real estate, I had thought hard about, I thought so hard about buying this one and didn't. I had too many other things going on. It was a span of control. It pulled back. I think I'll buy it if it gets above the spine of the dragon tomorrow. That's the one I want to get right there. Okay. McDonald's, we're still okay. The stop is in place though. I want to lock in gains. PBW, we got 2 positions in. I'm gonna, I'll put a third position above the Bollinger Band mean. We got our stop at break even on the second entry. Silver, still working well. I still don't understand it. We got hit on the we got hit on our stop there, so we had 2 short and covered, then we got long one and second one in, so we got a fractional win on Virgin. That's a speculative one. I had gotten short and covered. I covered this one at the open today in Simon Property Group. It went through this. I couldn't pull the trigger on it yet. I just still don't believe that we're close to getting the earnings okay on that. I'm probably wrong on it, but let me see it get above. I think I got to see it get above the PSAR flip, and then I'll buy the PSAR flip, and then my trade would look like this, back to fair value. So let me see that. If it gets above this blue line, I'll buy it. Treasuries, negative interest rates on the 1 and the 3 month now. Whoop. Oh, I see what I did. It accidentally hit repeat, so it wasn't letting me grab the box to adjust. So negative interest rates, and then that one came back and hit our stop, which we had tightened up in here. So this was a gain from here to here, but this one was a sell-off. So fractional win. I got long on Tesla. I just couldn't stand it anymore, and it closed right where we opened it. So, you know. So I'm long Tesla with a 2-day low on the stop. Still hate it. Oil, we're long one. Stop down here. It closed well, so I'm hoping that like the Chevron, the Devon Energy, and all that works. Volatility got a spike up today after it came back and tested the VWAP. Walmart, I couldn't pull the trigger on it yesterday. I wanted to, and I couldn't pull the trigger on it today, and I wanted to. I just can't get short Walmart. Psychological, so don't worry about it. So moving on. Wheaton is doing pretty well. Makes more sense than silver to me right now, so maybe it's time to get this one like this. I think that's what we got to play it. Win, we got long today. Stop is still down here. I think they're going to get some money. U.S. Steel still holding, but I can't stick around too long on that one. We'll go to the daily low because we got 2 positions in. Materials, got the second position long here, and it held up pretty well, but the stop is tight. Energy, I moved the stop up to the low here. This one was a long and then a fail. So this one should actually read like this. Sorry. Should look like that. So I'm moving my stop up to here. So the entry was here, and now the stop is locked in, just to clean that up. Finance, we got long them today. See what that looks like. Yeah, long, and my stop is still down here at the like the 2-day low. I don't love them, but I can't really argue with them. I moved my stop up to the just below the close on tech. Move the stop from here up to here. Second position I'll add at 84.85. Healthcare, I think we got long on that one today. Yeah, I've got long on that one. My stop is down here. So that's what we're looking like on the speed run. And I think that's all I wanted to cover on those. I started putting together some short presentations. This is going to be a sample of the kind of stuff that's in the all of those learning management system. Like here's a sample of a flashcard in which let's see, shape. So this one we had a sell-off in the usual way, a low, a higher low. So this is buying in between the belly of the 10 and the height of the 10 with a rising low. So that's like a pocket entry. And then the price level ladder humps of the RL10s and dragons all the way up, and with a hard stop that would be stop and reverse. Somebody had asked me about the WMB3. So the idea behind the WMB3, this was how I was doing the morning hooks before we had the RLCO framework to describe it. I wanted to just really simplify it. So the first thing in the WMB3 was Williams percent R10 had to be oversold. So when you get a gap down, it automatically starts oversold. So you put the Williams percent R, W is Williams percent R. Then MACD histogram, in this case I'm using PPO, but it's the same thing. Then you need to see a MACD histogram uptick, so like our spring, and then you look for a candle breakout, and that's the B, and then I do it on either 1 or 3 minute charts. The WMB3 would be on 3 minute charts. So in this case, you get gap down, MACD histogram uptick by the next candle breakout with a stop below the swing low, and so you get an entry at the green line, or at the green dot, and then you target the gap, and then this was a reasonable exit, and then this was a pullback and exit. So those would be typical exit areas. Well, later in the day, you get something like this. You have a WMB, you have a Williams percent R sell-off, MACD histogram uptick by the candle breakout, and now you get this entry, and now you decide where you want to get out. This is what it looks like in a close-up. So this was where it closed at 4 p.m. here, and then it gap open here, and then sold off. So as soon as it gaps down, Williams percent R10 is going to be oversold because you have 9 minutes of price and then 1 minute of price. So that's always going to start off. So as long as it triggers percent R, then that rule is good. And then when you get a MACD histogram uptick that closes, then you look up here and you start waiting for a candlestick breakout. It didn't. It didn't. It did. So now I get long at 3 with the stop below the swing low. Now I'm in at 56.90. My first target is up here. So that's the WMB3 explained. This one is the max pain range compression idea. There's some kind of big sell-off that then compresses into the tightest doji, and that gives you a yellow zone. And then if this was correct, then if this doji collapses, the size of this move is going to be the size of that move. But if this was a overreaction, then this is a 50% retracement and then a return to the previous collapse. So you get this large move in either direction, and you're in a critical state in the doji. That's so you get max pain, psychology of fear, range compression, that's a shift in psychology, and then you can start engineering that trade. This one, the idea, the concept of being the second mouse, that the innovators are the guys who buy it at the bottom, that brave first mouse, but then we see some evidence of a retracement, like a WMB3, 1, 2, 3 entry, frog box off the bottom, crossing the RLXD crosses. Some kind of information allows you to be the second mouse, and then you want to see the early mass adopters come in, the late mass adopters, and then finally the grumpy old men, which take it back to the previous high when they have to buy it. So in every day in every way, we're trying to answer the question strategically, systematically. How can I posture myself inside my concept to be the second mouse? Another way, if I'm framing trades, I'm thinking about green and yellow zone. So if on any time frame, if that was the previous range, the range of the look back period, as long as price is in between the high and low of the look back period, I don't have a decisive move yet that tells me the truth has changed. I'm still governed by whatever is keeping it inside that trading range. And so then those become mechanical entries for swing trades, or buying yesterday's high of the day plus a nickel. That's the mechanical entry or the collapse. So this creates the idea of the yellow zone or the range risk. And then once it breaks through there, the green zone goes to what's the next profit target that would not be surprising? Or what would be the profit target down on this side? Or what is that initial range risk protecting me against? So that's the idea behind green, yellow, and red, GYR, green, yellow, red zone. So I got a ton of other sample stories and flashcards and whatnot in here. And every one of those is going to get elaborated with examples inside that thorough, linear, documented, deliberate learning management system, fully documented courses. So when I talk about all those other courses, this is the kind of information I'm putting in there that is systems, strategies, techniques, and tips for both day and swing trading. Things that you just get through time, like the idea of the 1, 2, 3. After a good move, we frame some kind of trade with a tight critical state. It gives us a great move. Then that's the last peak, and then it sells off. It makes a lower high, and it takes out so that's the first bar, second bar. Then in the third bar, this is a 1, 2, 3 exit. And then if this was a good move, we're not immediately stopping and reversing, but we're waiting to try to find the reversals where the low will be higher than the previous low. And this gives us that lazy W effect, or the pocket entry. So that's what we mean by the 1, 2, 3 simplified entry, or a simplified exit. And then this would be that simplified 1, 2, 3 re-entry, where you had, again, that same critical state, great move, 1, 2, 3 exit, find support, and now it gives you a 1, 2, 3 entry. And now I can put my stop here, and what I have is the power of this first move is still lingering and causing people to want to buy the dip, as documented by an initial low and then a higher low. And the fact that you got these higher lows in the candles makes it very easy to buy this on a 1, 2, 3. And that's how we get into trades like this one, a 1, 2, 3. We can look at things like this on the collapsing dragons, that when you have these brilliant moves up out of the congestion, you get a great move, and then it compresses into that Z3 pinch. That breakdown out of Z2, or below the dragon, if you could see that, the collapsing here, leads to that, like almost it cracks like a floor or ice on a lake. And you get the collapsing move that is the same size as this ascending move. So when those support and resistance levels crack, that's why we put statistics on there, so that we know what is the point at which the resistance breaks. So this one crack, and now you've got these little sideways channels. And now when this one breaks, this looks like the next leg where this thing didn't follow through. It's going to crack and break here. That's the trade signal. It didn't follow through to the upside. It cracked its support, and so the next move was huge down that way. So these are the kinds of things that we want to pay attention to, because intraday, when you get these breakouts, as we saw with today even, but at any time, this is in volatility back in the day, 2013, it was still the same stuff. That RLXD, you get a massive run up, and then it collapses. And then if you believe that this was right, and you don't take this exit, now suddenly you get to watch, in a matter of 15 minutes, all of your gains come back, and now you're underwater. So when you get these kinds of patterns, the dragon gives you the discipline of saying, let me keep most of the gains while giving back a reasonable time and space, so that if this is going to support and go, then I've given it a reasonable time, but I've taken my professional profits and protected against those losses. So those are the kind of things that will be in the coaching program that I just put on the Patreon yesterday, and that's going to go into that Talent LMS. So we're building out those courses and all these little mini lessons for you to, then you'll have unlimited access to those for as long as you're in the coaching program, or if you buy the annual library card, then you'll have access to all those courses, all of them, all year, unlimited access, okay? So that's everything I want to say. Take good care. I'll get the daily report out here as soon as I can. It's given me grief again. I have to reinstall Excel. But we should be good to go for tomorrow. Same targets, same volatility. Remember, bear volatile, but MACD histogram went into the spring, and risk Z rolled to the upside. So let's be mindful of that and be ready to take our measured buckets of R. Okay? Last chance for questions.